Hey, Kevin. So you recently said on CoinDesk TV that institutions' ESG committees are, in fact, taking a harder look at crypto assets specifically and demanding better compliance. And of course, that conversation's only heated up since then, especially around Bitcoin. So we'd love to know, what's your take on the current view in ESG in terms of the sector?
You know, this is all a good thing, and I'll tell you why. It shows you that the institutional allocation committees and sovereign funds and pension plans and large institutions who really have been ignoring crypto for quite a long time. I know we're all very excited about it, but the truth is that less than 1% of institutions globally actually carry it as an asset class at all. So we're just at the nascent beginning of this interest. And as you know, and it's been discussed quite a bit in the last few weeks, most of these institutions have both ethics and sustainability committees that filter offerings before they're allocated on the investment committee. And they're doing the same thing with every asset. They're not just singling out crypto or Bitcoin or Ether. It doesn't matter. They're doing it with every asset. And so the fact that they're going through this process, I consider a very positive sign. And now we have to find a voice. The industry that mines Bitcoin specifically needs to find a voice to talk about the things they do that actually help build sustainability into energy. I mean, obviously when you're mining coin, you want the lowest cost of energy you can get, and that makes you invest capital in finding it and finding sustainable ways to have it so that you can mine in the most profitable way you can. The profit motivation of mining Bitcoin is actually helping sustainability, but that voice is lost in the criticism right now, particularly after New York threatens to put that 3-year moratorium on Bitcoin mining, and then you heard from Elon, and then all the institutions chimed in. We have no voice. Miners have no voice. That's the problem currently.
So Kevin, so a voice is part of this, but presumably there's some very specific things that, whether it's miners or developers of digital assets in particular, can do to try to ensure that they do meet these demands of ESG investment committees. What kind of things should they be focused on?
Well, if you're in Kazakhstan burning coal to make Bitcoin, not so good. That's obvious. Obviously, every sustainable committee is going to say, no, we don't want that. We've got to find a different way to do it. And I think a lot of the energy now, and there's more and more of this conversation and dialogue occurring, is to go to the institution itself and say, I'm a Bitcoin miner. I have a sustainability mandate. I am in sync with you. I am going to mine my coin sustainably. Here's my energy source. Here's how I do it. Here's where I mine it. And you can buy my shares if I'm public, or I'm private. You can invest in me, and I will hold that coin on my balance sheet for you. You will know its provenance. You will know it was mined ethically. You will know it was mined sustainably. And we together can build this business together. That's after you as an institution decide to put 3 or 5 or 6% into Bitcoin in the first place. And there's a lot of excitement about Bitcoin. There's no question. It's the one that most institutions are talking about, even though as a community, the crypto community has lots of other opportunities. Right now, the institutions are interested in being exposed to the volatility of Bitcoin, but they've got to resolve this problem. And I think there's some very interesting research going on now, and indeed investments, and I'm part of it, to try and find a way to tag a Bitcoin, a coin itself, that to prove that it has a wrapper around it, that it came from a sustainable miner. And this sounds out there, but it's being worked on right now because that's what institutions want. And when that dam gets released, the amount of capital that will come into Bitcoin, it'll be the reason it goes to 100,000, 200,000, and all the dreaming that's been going on around price appreciation. That's not going to happen until institutions start to buy it. So everyone's got to wake up and realize there's demand, but it's got to be done around ESG concerns.
So to your point, there definitely are some really exciting projects and data and high quality research on these topics. But the reality is, at least right now, the debate around Bitcoin's carbon footprint is really it's happening in these overly simplistic talking points on both sides. And so some of us really believe there's a critical need for more nuanced, sophisticated dialogue on what's possible and what's not possible. What do you think can be done to help shift the narrative?
Well, the narrative is going to be shifted by the market itself. I mean, obviously, there's a lot of miscommunication and a lot of mistruths about it. The fact that there are miners in China and other places in the world, Iran, Iraq, Kazakhstan, et cetera, that are not really concerned about ESG issues because they've never had to deal with it, but they're still profitable miners. New mining operations, new investments in mining are very, very, let's call it, hip to the issue. They get it. And particularly if they're going after institutional capital, there's many deals in the market right now that are trying to raise $100, $200, $300 million to build out facilities in a sustainable fashion. So, obviously this is a very new issue. It's probably only 4 months old, but it's becoming a big cry from those institutional investors. And the community itself, there's many different views, there's no question about it, but this issue is not going away, that's for sure. And if you want to unlock, as I said earlier, the power of the institutional dollar, the billions and billions of dollars that would be coming into Bitcoin alone, if it was in a way that would be part of the mandate for sustainability and ethics, that's what really unlocks the power. So everybody that owns Bitcoin today, regardless of how it was mined, is incentivized to solve this problem for one reason alone: price appreciation. This is not brain surgery. Everybody can figure this out, price and demand. And to ignore it and to say, it doesn't matter, is a huge mistake. And I think over time, particularly over the next 24 months as the new deals, every deal I look at now to invest in a miner, just let's stay in the mining sector for a moment, it's the number one question I have. How are you dealing with the ESG issue? What is your plan to that may want to own your stock down the road just to have exposure to your coin? What are you doing about it? Are you taking off flared gas? Are you new a hydro facility for hydroelectric? Are you going to new geographies where there's very, very sustainable low-cost power? What's the plan? And I'm glad we're having the conversation. I'm glad you're focusing on it because it is a very big deal.
So it sounds like you think this is very demand side driven. Do you think that there's alignment in these investors? Do you think that they agree on what it is they want to see?
Well, it goes from a baseline of don't burn coal, don't do harm, to let's find the most profitable miner that has found a way to get the lowest cost energy contract. I mean, there's a lot of differences between all of these different offerings. But this issue, we weren't even talking about as a crypto community just 11 months ago. It wasn't on anybody's radar screen. And then all of a sudden you started to hear it, no matter what direction it came from. There's all kinds of people talking about it. But I think it's not a bad thing at all. The challenge with a decentralized asset like Bitcoin is there's no central voice. There are thousands of participants, but there's no committee. There's no, for lack of a better word, lobby group that says, no, these are the actual stats. This is the real information. There's lots of different tangents, but it's an industry that's so nascent, so new, that it hasn't found a way to say, wait a second, we're being accused of all these incorrect facts. We're going to fix this. We're going to put out real information. In the end, the truth is what matters, particularly if you're an institutional investor and you want to know the facts. But I can guarantee you at the institutional level right now, whether it's sovereign or domestic pension or anybody else around the world, they are listening to what government's saying. Norway just pulled its tax credits because they've got a lot of concern at the popular level. The population, the people that live there are worried about it. You've heard the same concerns out of other geographies saying, why are we burning all this power to make, a currency? But there's no voice. There's nobody pushing back. And I think this is going to change over time. Either the CEOs of the large mining operations will come together and say, here are the facts about what we do, or the crypto community will somehow take from a decentralized view to a central one to address government's concerns at the state level, at the federal level, and at the international level as well. Bitcoin as an asset is here to stay, and now it's got to get in sync with what institutions want before they buy it.